Hello to my copiers and followers. I've been away for about 3 weeks now. Yeah, I think it's 3 weeks, but I'm back this week. So let's have a review of the past week, or this week and the coming week. And we're going to do that by starting with price action. So let's go into it. Start with Bitcoin. So here is Bitcoin. So the first step is to identify the trend. What's the trend here is very clear. So after this bottom in March, Bitcoin has been in an uptrend. That's very obvious. There were some consolidations along the way. There's one here, there's another one here, but the uptrend is clear. So what's my thesis now? Well, looking at this, there was this uptrend, and then there was a pause or consolidation, another uptrend, and now we're consolidating again. So this is very straightforward. What am I expecting here? I'm expecting a continuation of the trend. Since the prevailing trend is an uptrend, I'm expecting this to break out. And what's interesting is Ethereum. This is something I've noticed during this uptrend. Ethereum has been acting as a leading indicator for Bitcoin. So this trend in Ethereum is very similar. It's an uptrend, just like Bitcoin, but there was a period of consolidation here from 30th of May till 21st of July. And then on the 22nd of July, Ethereum broke out of this rectangle. Broke out and closed at a price of 263. So that's 22nd of July. Now, if I go to Bitcoin, Bitcoin was in the same uptrend, but Bitcoin broke out on the 27th of July. 7th of July. So that's, to me, it looks like Ethereum is leading Bitcoin in this uptrend. So it's the same consolidation, and then 27th of July, Bitcoin broke out. Ethereum had done the same thing on the 22nd. And now Ethereum began to consolidate here. And then on the 13th of August, it broke out again. Bitcoin is in that same consolidation, and it's already the 15th of August. So going by that, that's my thesis now. Going by that explanation, it looks like Bitcoin is going to follow Ethereum. It's going to break out to the upside. Now, what if that doesn't happen? What's the alternative thesis? If that doesn't happen, the worst that can happen is price. Right now we're at 11,800. So price will pull back to the bottom of this channel. And if that support doesn't hold, it breaks down rather. So if price breaks down, where is it going to stop? I'm just going to pull up my Fibonacci retracement here. So this is a retracement of the entire move from the last swing high from 25th of June. Yeah. So that was when price closed at 13,000. So this move here retraced all the way down in March to somewhere around 4,000. And then we had this uptrend. So what the worst that can happen now is price begins to retrace downwards again. So if we break below this, the bottom of this channel, the next area to watch will be somewhere within this circle. Now, inside that circle, there is the 61% Fibonacci retracement level. So price could come down and bounce there. There is also the Ichimoku cloud. This can act as a very good support for price. There is also the 50% Fibonacci retracement level. And the 200-day moving average is just around that same spot. So that entire area is an area of strong support. And this is the same area where price was consolidating for months, the same area. So this area here is an area to watch. And one other thing to watch is if I drag this all the way to the beginning of the sell-off, the value area using volume profile is also around that price point. So that's a place to watch in Bitcoin. Okay, next is, let me just take all these drawings out, go away. Okay, now moving on to US dollar. Now there's so much going on in US dollar, so lots of fundamentals behind this. But just looking at the price chart, first things first, what's the trend? Well, taking price from March, when we made that swing high at 102, it's been downhill since then. Like that. Now price is at 93. This is the US dollar index. Price is at 93. It's not really price, it's an index. So from 102 to 93. Clear downtrend. So what's the thesis here? Well, I don't want to use fundamentals. I just want to look at the chart. If I look at the chart, this looks like a bear flag. So you expect the bear flag to break down further down. If it breaks down, where does it stop? I have some support levels here. So price could break down. We're currently sitting at a support at 90, 92. It could break all the way down to 91. That's not very strong support. If that doesn't hold, it breaks down even further to 88. Now that's dangerous territory. If that fails, then it's a free fall. It just keeps falling. But I don't know if that's going to happen. But if it happens, well, just keep buying gold. So that's the thesis. I see this falling. Now, what's the alternative thesis? If it doesn't fall, it can bounce at this level here. This is a very, I'm just going to take these indicators away. Right. So this is a very, very weak support area. This line here, 92. But the alternative thesis is price could bounce off that level and start making its way up, capture the 61% Fibonacci level, and then capture the 50th Fibonacci level. And then it runs into very strong resistance. And then it runs into the Ichimoku cloud too. That is so it's not so easy to tell what's going to happen. But as a swing trader, life is easy. All I'm looking for are levels. Okay, if price breaks below this, breaks below this channel, where is my next level? My next level is 91. If price breaks below 91, where's my next level? 88. That's how I view it. If price breaks above the channel, where's the next level? Well, next level is 95. So that's US dollar. So much going on in the fundamental area. Central banks are printing money, lots of stimulus. So that is devaluing the value of the dollar. Crude oil is next. Crude oil, for a very volatile asset, crude oil has not been volatile recently. It's just been, gradually making its way up, and now price is at $42 a barrel. Now, for those who love chart patterns, since price broke above this Ichimoku cloud, it's been making higher highs, higher low, higher high, higher low, higher high, higher low. And now it's at the end of, it has formed what is called a rising wedge. That is two convergent trend lines. And at the top of that is the 200-day moving average, this blue line. So what's the thesis here? I don't see price breaking out to the upside here. The strong resistance here. There's a bearish pattern. So, I don't trade oil, so it's not really a problem for me. But it's very difficult to see price breaking above it. Even though, when I look at the crude oil inventory, where is it? Today's 14. Crude oil inventory was a draw. 4.5 million barrels draw. The forecast was 2.7 million barrels. So instead of a reduction by 2.7 million barrels, there was a decrease in inventories by 4.5 million barrels. And what was the outcome? Price didn't move up. Instead, it moved down. Well, this is Friday, Thursday. Okay, it moved up 2%, but after that, it ran into resistance at a 200-day moving average, and Thursday and Friday were down days. So there's really no thesis for the upside here. Now for the downside, we've run into resistance. There's a bearish chart pattern. If price goes down, where does it stop? Where is my level? So if price goes down, first support area is the Ichimoku cloud. If this doesn't hold, it goes all the way down to this level. That's $35. And that's where there is support. There's support here, here, and here. This gap has been filled. This entire move up in this wedge was the filling of this gap. So this is, for crude oil, $42 down to 35 is a huge move. So this is enough of a pullback for bulls to go long. Yeah, that's enough of a pullback. 35 is actually kind of cheap for crude oil. Oh, look at this. Link USD is going crazy. That's Link USD breaking out. So Ethereum has broken out. Link USD looks like it's breaking out of this consolidation. It's currently at $17. Bitcoin might follow very soon. So next one is gold. Now gold. Very interesting. The US dollar is collapsing. Gold has been in an uptrend. So the prevailing trend here is an uptrend. And gold, this is GLD by the way. GLD tracks gold very closely, so it's a good substitute for gold. Now, GLD has made this swing high, like a temporary top at 193, and it has pulled back. So I've drawn this Fibonacci retracement levels. So that pullback has currently found support at the 23% Fibonacci level. That's where we are now. The thesis for gold is currently still, wow, look at Link, 7%. This is crazy. So unfortunate that Link is not on eToro. So crazy. All right, back to GLD. So what's the thesis for gold? Gold should, considering all that is happening in the economy, macro, fundamentals, all that stuff, central banks printing money, US dollar collapsing, gold should continue to go up. So that means this uptrend has not come to an end. What simply happened here is gold got overextended. The RSI was at 87. That's pretty high. So gold got overextended and now it has pulled back. It's just a healthy correction in the uptrend. That's the way I see it. Healthy correction. So gold has corrected to the 23% Fibonacci level. So the next move I'm expecting is a bounce and a continuation of the uptrend. That's the thesis. Now, if that doesn't happen, what's the alternative thesis? Well, the alternative thesis is gold collapses even further. Well, it's not really a collapse, or it pulls back even deeper. And the first level is the 38% Fibonacci level. That's 172 for GLD. And this area is very important. That's very close to where we had this consolidation. So it's about 2 weeks of consolidation in July. So gold pulls back somewhere around here. So not only the Fibonacci level, there's the consolidation, this one, and there is the Ichimoku cloud, this cloud. So those are all going to act as support. Yeah, so that's the alternative thesis for gold. And the way things are looking, every pullback will be bought. So if gold pulls back down here, buyers will come in and buy it. Now, if I use volume profile, this is the value area. So bulls will come in and defend price here. But that's below the 50% Fibonacci level. That's a retracement of half the move. That's too much. Okay, leaving gold now, moving on to, what's the next one? Let me just delete this lines. All right. S&P 500. I'm using the SPY. All right, this is the big one. The stock market, large caps. We're very close to an all-time high. We haven't closed above the high in January, but very close, very close. So on SPY, we're at 336. All-time high is 338. So what's the thesis here? Well, this is an uptrend. Very clear uptrend. Price is moving that way. Now, For those who like wave analysis, this is wave 1, wave 2, wave 3, wave 4, and that's wave 5. So it looks like we've had a lot of accumulation, and now we are at the distribution stage. So at the distribution phase, we're going to have a correction, which will come in 3 waves, A, B, C, and then we'll resume the uptrend that way. Okay, that's for wave analysis. But just looking at price action, this area here is a resistance level. So it's a lot of people look at fundamentals to say valuations are too high, the economy is in the ditch, how is the stock market rallying, doesn't make sense. So there is that, but that's not really what to look at. Price keeps going up, so it's an uptrend. In an uptrend, you buy. It's very possible that there will be some profit taken here. It's also possible that price just blasts through this level, keeps going up, but eventually there's going to be some sort of correction. These corrections are healthy for the uptrend. So it's very hard to tell what's going to happen here. One just has to be careful. But for me, the expectation is for the uptrend to continue. Why shouldn't it continue? But what if it doesn't continue? What happens? Well, if it doesn't continue, then there should be a pullback, and the first level that I'm looking at is to this level, 329. Is that 329? No, 326, because I have a support zone there. There's support here, there's support here in June. It's also the same level here back in January. So it's a very decent support zone. If that zone does not hold price, what happens? It falls further down. And there's a zone here. I'm going to pull it up. There's a rectangle there. Where is it? Yes, that's it. And there's another one. Yeah. So this area here, it's a very strong support zone. So price initially this was a resistance area. So during this uptrend, price went up, and then in April it got to this resistance area, tested it, failed, pulled back, retested in May, pulled back, and then on May 26th broke out, and then that same area became support. So resistance becomes support in June, and then retested again on the 29th of June. So because this is an uptrend, have a very serious correction. Worst I'm expecting, worst case scenario now, I'm expecting it to pull back down to 300, this same level. That's just at the bottom of the Ichimoku cloud. And then from here, I should expect more upside. So that's the alternative thesis. That's the alternative thesis. Okay, just take all these drawings away. And that same area is also the 61% Fibonacci level. So pull back down to the 61% level, and then all the way back up. That's a serious pullback, but that's a very good buying opportunity for those who are not in this bull market. Okay, that's all for price action. Now I need to check market breadth. I like market breadth. So with market breadth, what I'm looking for is I know this market is in an uptrend, but I also know the economy is in the ditch. Okay, so stock market is rising, the economy is just trying to recover. So how is this possible? Is this safe? This is why a lot of people are shorting the market, because it doesn't make sense. So how do I make sense of this? Well, best way to make sense of it is to check market breadth. So market breadth is going to show me how healthy this uptrend is. Is this uptrend just the result of a few large cap stocks pulling the market upwards, or is there wider participation by all the other groups of stocks, small caps, mid caps, tech, industrials? How healthy is this uptrend? One way to check that is to use the percentage above the 200-day moving average. So this is the S&P, SPY. That's the uptrend there. And what I have here is the percentage of stocks in the S&P 500 that are above their 200-day moving average. Now, what I'm interested in here is not really the number or the percent. Well, the percent is important. As long as the percentage of stocks above their 200-day moving average is above 50, then I can conclude that this uptrend is legit. This uptrend is healthy. And right now, that number is 62% for the S&P 500. But what I really want to see is, I want to see this uptrend. Since June, the number of stocks above the 200-day moving average has been on the increase. That's very healthy. I like that. Now, if I look at the NASDAQ exchange, all the stocks in the NASDAQ, all the stocks listed on the NASDAQ exchange, what percentage of those stocks are above their 200-day moving average? 58%. So that's showing me market breadth. How healthy, how much participation is there in this uptrend? Well, in the NASDAQ exchange, 58% of all the stocks are above the 200-day moving average. Now compare that to March 23rd, when the market bottomed. Look at this. Just about 2% of stocks were above the 200-day moving average in the S&P 500. Same thing for NASDAQ exchange and the New York Stock Exchange. So there's an uptrend there. And in the New York Stock Exchange, 54% of stocks above the 200-day moving average. So every day, this number keeps going. Well, not really every day, but mostly every day, it keeps going up. So over time, over the past 2 months, it's been a very steep uptrend. So that tells me, well, it's not just Apple, Facebook, Google, Johnson & Johnson, Adobe that are pulling this market up. All the other small cap stocks, mid cap stocks, they're also capturing their 200-day moving average. They're also making their way up. It gives me some degree of confidence. Okay, I'm gonna just take all these drawings away. Now, another way to check market breadth is to look at the cumulative advance decline. Advance means the stock closes above yesterday's price. So when the stock closes above yesterday's price, it's advancing. Decline means it closes below yesterday's close. So close above yesterday's close, advance. Close below yesterday's close, decline. If you take the cumulative advance and decline, you get the cumulative advance decline. So this is a subtraction. Cumulative advance minus cumulative decline will give me the overall trend in terms of advancing or declining of the stocks. And this is very clear to see. The overall trend in the large caps, SPX, large caps, stocks are advancing. Okay, that's good. Everybody knows that. Apple, Microsoft, Facebook, Google, Tesla, Netflix, they're all advancing. That's pretty clear. What about mid caps? Stocks that are not, or those companies that are not, that don't have the same size in terms of market cap. They are also advancing. They kind of struggled during June, July, but now they're advancing. You can see this is a high, that's a higher high. So this, if I draw a line here, we're making new highs. If I draw a line here, new highs. And then if I look at small caps, this is small caps. The story is the same, but it's very clear that there was a downtrend here. They were struggling, but now there's an advance, new high. So overall, it's an uptrend. That's another way to measure breadth or to check breadth. So it's not just large caps that are advancing. Small caps are also advancing. They are closing higher and higher and higher. So that tells me, doesn't matter what's going on in the economy. The economy is different from the market. The economy could be collapsing, but this market, well, there's a link between the two, but the technician doesn't care about that. The technician cares about price. And price keeps advancing throughout the market. That's what's important. Now, another way to measure breadth is to check new highs and new lows. And these are 52-week highs. 52 weeks is I think it's 1 year. I believe it's 1 year. Now, I'm going to check that for the SPX, that's large caps, NASDAQ exchange, New York Stock Exchange. Now, this was the bottom, or this was the downtrend and the bottom here. So many stocks were making 52-week lows, new 52-week lows. Now, but since that rally, the last time a stock made a 52-week low in the SPX was in May, right here. Since May, more and more stocks have been making 52-week highs, that is new yearly highs. More and more stocks every day. On Friday, 16 stocks in the SPX made a new 52-week high. Same thing in NASDAQ. Okay, this is the difference between new highs and new lows. So there were 41 more highs than lows. Pretty much 41 new highs. New York Stock Exchange, it's also the difference, 37 new highs. So to wrap that up, more stocks are closing above the 200-day moving average in the large caps, mid caps, and small caps. More stocks are advancing, and more stocks are making 52-week highs. So that tells me that market breadth is healthy. That's what it tells me. There's no other way to interpret that. Market is healthy. The uptrend is healthy. So it might be struggling from time to time, but overall it's healthy. So that why would anyone short this market if most of the stocks in the market are in an uptrend? Well, not really in an uptrend, but they're gradually capturing the 200-day moving average. They're making new highs, new 52-week highs, and they're consistently advancing. There's no reason to short the market. If you want to short the economy, That's fine. Good luck with that. How do you even short the economy? But leave the market alone. The market is in an uptrend. Another way to confirm this is to check how well small caps are doing relative to large caps. Large caps are mostly doing okay. What about the small caps? So I'm going to check the ratio of small caps to large caps. And if I check that ratio, when it goes down like this, small caps are underperforming. So like this, small caps were underperforming. But when it goes up, large caps are underperforming. So what this means is, in this area of this chart, small caps were outperforming large caps. So that's a confirmation of market breadth, that it's not just large caps that are pulling the market upwards. Small caps are also pulling their own weight. There are ups and downs like this, up and then underperform, outperform, underperform, outperform, underperform. So it keeps going up and down, up and down. But for the past 20 something days, this region here, it's been an uptrend. So the entire market is doing well. That's the summary of market breadth. Looks like there's really no reason to short the market. You can short for, if you're contrarian, you can short, but how large is the correction? Very little compared to the uptrend. Okay, now I want to look. I've been testing a new idea. I created a portfolio within a portfolio. So all these stocks I have here, I actually have them in my portfolio. So I call it the marketplace portfolio. So all these online marketplaces like Amazon, Jumia, Etsy, Fiverr. Fiverr is a marketplace for, what's the best way to describe this? If you know how to do something very well and you want to get paid for it, you can. Well, it's a marketplace for talent. Someone can hire you to make a drawing for them. Someone can hire you to write a code. Someone can hire you to do a voiceover. So it's a marketplace for talent. Alibaba, wholesale marketplace. So they are all marketplaces, and they've all been doing well. So I've got all these stocks in my portfolio. So what I want to do is I want to monitor their performance using the relative rotation graph. So this graph has 4 quadrants. The red is the lagging quadrant, and then the blue is the improving quadrant. Green is the leading quadrant, and yellow is the weakening quadrant. So the ideal rotation of a stock is to move from lagging. I'm going to draw on this screen. So the lagging quadrant is in the bottom left. Improving quadrant is top left. Leading quadrant, top right. Weakening quadrant, bottom right. So the ideal rotation is from lagging to improving, and then after improving you begin to lead, and then after leading you weaken, and then you start lagging, and you go on and on and on. That's how these stocks are supposed to rotate, but they don't have to follow that path. They can jump anyhow they like. So I've got this portfolio within a portfolio, and I'm trying to monitor the performance of these. This is I call it marketplace portfolio. So I've got Jumia, Alibaba, let me scroll down. Scroll down. Right, I've got how many? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 stocks. Jumia, Etsy, what's that thing called again? Mercado Libre. That's Amazon of South America. Alibaba, Fiverr, Shopify, eBay, Ocado. That's in the UK. JD, Amazon, Walmart. Walmart is now a marketplace. Ideally, it should be referred to as a retailer, but it seems they now have a marketplace. And the benchmark is the SPY. So when stocks move to the right, they are increasing in their relative strength. That is, they are beginning to increase in their performance compared to the SPY. Once they cross this 100 mark, it means they are outperforming the SPY. When a stock moves up, it means they're increasing in momentum. When the stock crosses this 100 line, this horizontal 100 mark, it means their momentum relative to the SPY is greater. So that's the explanation for the relative rotation graph. So where I want to find stocks is in the improving quadrant and the leading quadrant. I'm not really interested in stocks that are lagging. Weakening, yes, I might take a look at them, but ideally, this is the shopping area here, improving, and this is where I want to be leading. And what else? Yeah, so this marketplace stocks are all doing well. There's hardly anyone in the lagging quadrant apart from Walmart. There's none in improving, although they sometimes end up in improving. But generally, they all do well, very well. They're all, most of them should be in the discretionary sector, consumer discretionary. I think that's where they should be. Some are in tech, but they all do very well. So that's why most of them are in leading. The ones that are not in leading have just moved into weakening from the leading quadrant. So I can animate this to view the rotation over, I think it's over a period of 1 year. So I'm going to click animate. And this shows me how they have rotated. Oh, look at Jumia. Oh. So that shows the rotation. I want to see it again. So initially they were all hovering around the SPY and then they began to outperform. Now there's so many things to take away here. Starting with Jumia. Jumia is this crazy stock. If you look at eToro, you see lots of people buying into Jumia. Some people got taken out. Jumia is extremely volatile. Extremely volatile. Lots of people had their stop losses triggered. And you can see that volatility because you can see it in the length of the tail. So each tail is, or each dot in this tail is a week. So this is 1 week, 2, 3, 4, 5. So this is week 6. So we're looking at a tail of 5 weeks. The longer the tail, the greater the volatility. So this is Jumia. If I go into the chart for Jumia, my God, look at Link, 9%. If I go to Jumia, this is a chart for Jumia. So you can see that high momentum. It's outperforming the SPY. And each of these candles here, let me start from here. This candle here, this one that looks very small, that's 15% move. This red candle, this one here, that's 13% down. This massive green one is 34%. This is 22. This one here, 9. So crazy moves. It just moves like a rocket ship. That's why it has this long tail. So it's clearly having the highest momentum because it's high up there, and it has the second highest relative strength because it's very close to the right. So that's one that I want to keep my investment in Jumia very moderate because it's too volatile. It will cause drawdowns in the portfolio. The stock I don't like at the moment is Walmart. Walmart is lagging. It's the only one in the lagging quadrant. So I think the strategy here will be to reduce my exposure to Walmart. I don't really have much in Walmart anyway, so I'll just keep it the way it is. Now, which ones am I interested in? I like Etsy. I'm just going to gradually rotate backwards. So Etsy, where's Etsy? It's Etsy. It was in the improving quadrant. Oh, it actually came from the lagging quadrant, moved into improving. This is Etsy here, and then kept improving. Look at that straight line. That is showing high momentum because it's going up, and kept improving, and then it went into the leading quadrant, began to lose momentum, kept moving, and now it's rolling over, and it has fallen into the weakening quadrant, but it's beginning to gain momentum again. It's turning upwards. So I like Etsy. I just like relative rotation graphs because you can see it in a graphical way. You can also read that from a chart. This is Etsy. High momentum. So this area here, high momentum, began to lose momentum and then regain momentum, and now rolled over, but it's making its way back up. So that's exactly what I'm viewing in this relative rotation graph. Another one I like is Amazon. I like Amazon here because the tail is so short, and what that means is it's not very volatile. Not very volatile. So if I rotate backwards, Amazon was, well, it was, okay, that's around that's last year. Its way up into improving, then leading, and rolled over, fell down into weakening, but very minor movements in the changes in the price. So that's why the tail is so short. And now it's heading north. So it's always good when the stocks are heading north or northeast. Northeast is best. Mercado Libre, MELI, is currently falling like a rock. It's probably, well, if I look at this, it seems they're all performing in a very similar way. It seems they're all rolling over at the same time. They're all gaining momentum at the same time. They're all gaining relative strength at the same time. So it's very likely that Mercado Libre will rotate back up as the others make their way up. Alibaba is already back in the leading quadrant. So that's just very interesting to watch. I like that. It's a very interesting way to monitor the mini portfolio. Now, I want to pick stocks for next week. Stock picks for next week. So what I'm going to do now is I'm going to I don't know how many stocks I'm going to pick, but I want to pick stocks that are likely to perform very well next week. And as I keep picking the stocks, I'll keep them till the end of the month. I'm going to put them in my virtual portfolio, see how well the stocks I pick perform. I'm trying to test a system for finding good stocks. So I'm going to start by taking a look at all the sectors: energy sector, financial. There are 11 sectors. So I'm going to click on 1 week performance. Now, looking at this table, the best performing sector this week was the industrial sector. Second best performing was energy, but everybody knows that energy has been terrible. This is a chart for energy. Look at that. It's one of the worst performing sectors since the bottom of the market in March. Look at that. That's horrible. So there was a low here, made a swing high, lower low, and now it needs to break above this high. So it needs to go somewhere there. At least recapture 46. Even if it does that, there are other sectors like discretionary that have made new highs. See? So what that tells me is 1 week is not a good measure of performance. So I'll go to 1 month. So I go to 1 month, energy disappears. It's down to 11, 10, 9, 8. It's now the 8th best performing sector. Industrial is still number 1, but now discretionary is up there. Technology sector is 3rd. That's good. Now what if I go to 3-month performance? Industrial is still number 1. Discretionary is still number 2. Okay, so if I'm going to pick a stock, I want to pick from the industrial sector because technology has been struggling of recent. It looks like there's some sort of rotation. Sometimes it looks like there's rotation out of technology, and then all of a sudden it looks like there's money flowing back into technology. So it's not really clear what's going on. But the best performing sector over the past 3 months has been the industrial. Discretionary has also been very good. But somehow it just feels like technology is the best performing sector, but that's not what's reflecting here. One way to check that is to check XLI against XLK. So that looks like a downtrend. XLK outperforms XLI. How about XLY against XLK? Now this is flat. So what that means is discretionary sector and technology are pretty much even. So yeah, I believe this table. So I'm going to find a stock from XLI, from the industrial sector or the discretionary sector. I'm going to click here, and then now what I want to do is I want to use the relative rotation graph for stock picking. So click on sector RRG. Now I'm going to plot the stocks in the industrial sector on my graph, and this is what I get. There are too many of them, so straight away I know I don't want this lagging stocks, so I'm just going to deselect them. I don't need stocks that are lagging. I don't have time. I want stocks that are ready to start making money. This is my shopping area, the improving. I'm just going to increase this, make it wider. Right. So this is the shopping area, the improving quadrant. I want stocks that are here, that are improving and heading towards the leading quadrant. But that could be dangerous. Stocks that are here could be rolling over and falling down into lagging. I want stocks that are leading, but the problem with stocks that are leading is they might be already overextended. That is, they might have advanced too far, and it might be dangerous to buy at the top. Now, there are stocks that are weakening. Now, weakening could mean they have just temporarily lost momentum and they're going to regain momentum and head back into leading. It could also mean they are weakening and they will continue to lose momentum and relative strength. Or I should put it this way. They have lost momentum, so they have fallen down into the weakening quadrant. Now, momentum is simply, on this chart, momentum is the rate of change of relative strength. That's the relationship. So I have relative strength on my x-axis. The rate of change of that relative strength is my y-axis. So momentum becomes a leading indicator for relative strength. So you lose momentum before you lose relative strength. Now, how that applies to this quadrant is, if these stocks have lost momentum, it means very soon they will be losing relative strength and heading towards the left into the lagging quadrant. So it's a bit risky. So that's a conundrum. What do you do? I definitely don't want stocks here. I've taken them out. So what I'm going to do now is I'm going to take a look at the charts of each of these. I'll start from here. UPS. UPS is doing fine, but it's probably overextended. So this preview here is showing me that's from July to August. That's about 2 months, right? So July to August is 1 month. Yeah, around 2 months. And UPS, let me just go to the chart. UPS. Now look at this. This is UPS. Do I want to buy into this? The good thing about the RRG is it helps you find stocks that are doing well. So you don't have to, if you consider all the stocks in the S&P 500 stocks, it helps you narrow it down by sector into the stocks that are doing very well within a particular sector. So any stock I find here, I know is definitely doing okay. Now this is already overextended. Do I want to buy this? And it looks like it's flagging. Okay, that looks like a flag. So it might break out very soon. I like UPS. What about FedEx? Looks very similar to UPS. I'll leave that there. MAS, Masco. Looks nice. I like that. SWK. Stanley Black and Decker. Let me see what that looks like. SWK. Doesn't look bad. Relative strength is good, outperforming SPY. What do I make of this? It's above 200 day moving average. Well, it's not bad. SWK, there, See, I don't even know what these companies do. Deere, DEERE, Johnson Controls. Okay, these are all looking good. Caterpillar, CAT. I'm trying to eliminate some stock, so I have very few to choose from. So higher high, higher low, higher high, higher low, higher high. I'm expecting a higher low, and then so this might go down further. So I'm gonna eliminate this. That's Caterpillar. I don't want that. FTV. I don't want this. Looks similar to Caterpillar. EMR. Oh, EMR. This one. All right. I know how to eliminate them. I want parabolic stocks. Right. This is what parabolic means. When a stock has a chart that looks like this, it tells me that this company has a product that people want to buy, or it offers services people want, and people are buying that product or paying for that service, and that stock is having very high revenues, or that company has high revenues. Basically, the company is doing fine. The stock price is increasing year after year after year. That's what it tells me. So I want whichever one I pick to be parabolic. These ones in green are all doing fine. How about the yellow? Let me see. Fast. Looks nice. My God, they all look good. Oh, EFX definitely doesn't look nice. EFX? Wow, it's parabolic. But, okay, this is the problem. What do I make of this? Is that a bull flag? Bad earnings? Yeah, bad earnings. Oh, good earnings. Gap up and then got sold. It's now finding support in the cloud. If I draw a line here, it's not only finding support in the cloud, it has found support here. So this is, I actually like this. Equifax, what do they do? Equifax sounds financial. Equifax? No idea. I don't want to check. So it looks like it's bouncing. See? It has hit support. It looks like the next way is up. I'm gonna leave it. There's so many. So many. Right. Need to be more strict. Granger. My God. There's so many. You know what? Let me check this. UAL. I think UAL looks terrible. United Airlines. Oh my God, those are the ones you don't want. United Airlines. No. United Airlines, Delta Airlines, General Electric, Boeing. All right. I see what's going on. I don't want these ones. You can see they're all rolling over. Look at that. So on deselect all of this. Yeah, industrial sector. This is where the airlines are. That's true. These ones are also too many. So what am I going to do? Well, I'm going to defer to the relative rotation graph, and I'm going to select the ones in the leading quadrant, because whatever is causing these companies to all lose momentum has not caused these ones to lose momentum. So deselect all of these. You can wanted to select all of them. I only want stocks in the leading quadrant, stocks with high momentum and high relative strength. So these are my stocks. Now animate. Okay, this shows me how the stocks have rotated, or their journey from where they were to where they are now. Let me just back up a little. To January. Okay, this is January. I want to see which ones did really well during the sell-off. This is the sell-off. CTAS. Never. Oh. Okay. CTAS did well during the sell-off. What I'm doing is I'm looking here. This section of the screen. So that area there is the area of the sell-off, and this is showing the performance. So during the sell-off, this was when the sell-off began. So during that, at the start of the sell-off, CTAS was doing well. FedEx was improving, and CTAS began to roll over. SWK, EMR, MAS, nothing to write home about. And the UPS during the recovery. Look at MAS. So MAS is interesting. MAS, I think I found something interesting here. So MAS was in the leading quadrant. That was far back in October. Okay, start of the sell-off. MAS was in the weakening quadrant, and it never moved into the lagging quadrant. Am I right? Yes, it turned up into the leading quadrant, and it's been there ever since. So what is MAS? I have no idea what it is. Masco. What the hell is Masco? And what do they do? It's not very parabolic, but doesn't look bad. Yeah, it's a general uptrend. I have no idea what happened here, but it still looks good, and it's doing really well. You see, now this looks overextended. Compared to the SPY, it's outperforming. So very good relative strength. RSI looks okay. It's trending downwards now. Relative strength is also weakening slightly. So I think I'll pick MAS. So what I'm going to do is I'm going to delete all these ones here next week. And let me see if I have MAS here. Oh, it's here. Trade. I'm going to invest. This is virtual trading, by the way. I'm going to invest. Let me see how much. $500 in each stock I pick. So at market open, my virtual trading account will buy MAS. Set order. Right. I like MAS. Now something else caught my attention. This is the start of the sell-off. CTAS was leading, and towards the end it rolled over, went into, oh, look at that. So CTAS was leading, rolled over into weakening, briefly into lagging, and then turned around straight into leading. Now, what the hell is CTAS? What did they do? Cintas Corp. Look at that. These are stocks I've never heard of. My God, look at this. You see what I'm saying? Whatever they are selling, people are buying it. Whatever they are doing is working. It's generating revenues. It's very likely they're also profitable. I don't know. I can check. I'm going to check CTAS. First of all, make an order. CTAS, Cintas Corp. $500. Another order. So CTAS looks good. Delete this. Yes, it's looking good. Now, sell off here. Bottomed. Higher, high, higher, low. High, high, higher, low. Swing high. Forms a bullish pennant here. Breaks out. Well, it's doing good. And look at that. Outperformance of the SPY. Still outperforming. RSI. Uptrend, great strength, great outperformance, looking very good. So let's see how that performs next week. Now, which other one? Got MAS, CTAS. Let me scroll back. Okay. Start of the crisis, FDX, FedEx was improving. Okay, FedEx improving. I'm watching FedEx leading, rolls over. Look at it, make a turnaround. Wow. Watch FedEx from improving during the sell-off, and as the market bottom began to lead, that's high momentum, improving relative strength, and then it rolled over and fell into the weakening quadrant. But look at this turnaround here. Just turned around sharply back into leading. Wow. FedEx, FDX. Not a pretty chart. Well, it looks good. Parabolic. Yep. But it had a very long period of underperformance. This whole period here is scary. It only began to outperform here. Why is that? I have no idea. Don't know the fundamentals of FedEx. I don't know, maybe more people are, oh wait, stay at home. People are buying stuff. People are sending stuff. Maybe that's why. Oh yeah, FedEx and UPS are doing well. So it must have something to do with things being posted. People can't move around, something like that. But whatever it is, it's looking good on the chart. Now, is this overextended? Is it due for a pullback? I don't know. And it's hard to tell. But it's doing really well. So what do I do? FedEx, I'm going to pick one between FedEx and UPS. So what I want now is UPS, FedEx, MAS, CTAS. Get rid of these ones. I want to see what this looks like. Rotation, CTAS, Mars. Let's see that again. UPS suffered the most. It went so far to the left, and it was volatile during this period. My God, look at that volatility. Oh, UPS. 1, 2, 3, 4. All right, I guess those are my 4 stocks. I'm tempted to pick a stock from discretionary. Let me see what discretionary looks like, because I know discretionary is the second best performing sector. XLY. XLY. Now look at this. They all look like they are rolling over. Look at them, all of them going down. So they're all losing momentum. Look at Amazon, Tesco, eBay, Home Depot. I believe that's Home Depot. All, come on, stay there. All losing momentum. These are terrible. I'll stick with industrials. It's the best performing sector anyway. So my 4 stocks: FedEx, UPS, MAS, and CTAS. UPS trade $500. It's virtual trading, so don't test this strategy. FDX. Okay, I'm going to see how this performs, but I want to see what. So these are my pending orders: MAS, CTAS, UPS, FedEx. Those are my stock picks for this or for next week. Now, let me quickly take a look at CTAS. I'm just curious, what does that company do? Cintas Corp. Security snapshot. Cintas Corporation provides corporate identity uniforms and related business services primarily in North America, Latin America, Europe, and Asia. It operates through uniform rental and facility services, reading here, and first aid and safety services segments. The company rents and services my goodness, uniforms. I wonder if they are providing prison guards and prisoners with uniforms, something like that. It could be that. Uniforms, police, military, Coast Guard, and who else? Prisoners. Right. Historical graph. That's where I want to go. Now I want to see gross profit. Oh, look at that. Beautiful. Debt. How much debt do they have? Well, lots of debt for sure. Short interest. Wow, very low short interest, 1.6%. People believe in this company. How about revenue and growth? Okay, revenue is on the increase over the past 10 years. That's it, this blue one. Look at that. 2011, there was a pause and then on the increase. Even through the coronavirus downturn, still doing fine. How about net income margin? So the blue is, no, go to 10-year. Come on. So the blue is revenue. The green is net income. All right, I have lots of income. The company is doing well, very sound. How about price target? What are the analysts saying? So that's the price. The purple is the price target. Price target is currently $297. The stock is trading at $316. It's trading above the analysts' targets. That's interesting. That's interesting. Estimates. So out of 12, 13, out of 14 analysts that are tracking this stock, 2 say sell, 7 say hold, 5 say buy. Not like I really put any faith in what these people talk about. It's just fun to watch. Anyway, that's it for this week. See you next week.